Here on this Friday, you're watching Business at 9 and I'm Nivedna Prabhu. Let's begin with the top story and a significant development as far as Tata Capital that's gone ahead and filed a red herring prospectus for its IPO. Let me take that straight across to Anurag Joshi, my colleague, who is spearheading that coverage for us. In fact, he joins on the phone line with more details. Anurag, very good evening to you. That's a significant development. More importantly, what are we picking up right now?
Tata Capital, the financial services unit of the Tata Group, has filed the red herring prospectus. Now, this is a step closer to the IPO of Tata Capital. So they filed the red herring prospectus today. And according to the offer document, the IPO dates are opening for the public from October 6th to the 8th. Before that, on October 3rd, there is a bidding date for anchor investors. Now, if we look at the size of the issue, that's 210 million new equity shares which Tata Capital will issue in the IPO, and there will be an offer for sale by certain shareholders of the company, notably Tata Sons. That size of the OFS is about 266 million equity shares. The company has also hired several banks, and this includes Kotak, Axis, BNP, Citi, HDFC, HSBC, ICICI Securities, IFL, JPM, and SBI Caps. Tata Capital has been preparing this IPO for the last 1.5 years. And this IPO, if you see the timing of this IPO, this is just coming just shortly after the RBI deadline for Tata Capital to list its shares. In 2022, RBI had mandated all upper layer non-banking financial companies, that includes Tata Capital and Tata Sons. So Tata Capital had to list its shares by September 30. It had asked for a reprieve from the RBI, an extension from the RBI to list the shares, and had plans to list the shares in the early half of October. And now it is going ahead with the plans and concluding the IPO by October 8th.
Right, Anurag. Thank you very much for joining us on that significant development. In fact, more importantly, putting that into perspective as to what we're picking up and the date, of course, where we're looking at it. And we'll continue to track that. But for the moment, we leave the conversation at that. Let's now shift our focus, to how the markets, in fact, fared this week, because the Indian market continued to see profit booking for the 6th day straight as Nifty registered its biggest weekly decline. This is since February this year, ending nearly 3% down for the week. Now, broader markets also witnessed a bloodbath, clocking their worst weekly performance since February this year, with mid-cap and small-cap index both ending over 4.5%. That's lower for the week. Let's talk about sector-wise. The Nifty IT was the top sectoral loser this week, ending its 2-week gaining streak down 8%, mainly dragged by Coforge and Emphasis. The Nifty Pharma too snapped its 3-week gaining streak, mainly, of course, dragged by Laurus Lab and Biocon. FMCG, in fact, the index saw the biggest weekly decline. This is since the month of July this year. Nifty Realty was also down 6% this week, mainly dragged by Godrej Properties and DLF. Right, let's shift our focus to Federal Reserve's preferred inflation gauge. That's the personal consumption expenditures. That is the PCA data, rises slightly on an annual basis to come in at 2.7%. So if you were to compare that as well in terms of the key details on your screens that are playing out, this is in the month of August. Now, while what we do understand that this is in line with what analysts were penciling in, remember that in June, this figure was at 2.6%. So the core PCE data, which excludes food and energy prices, came in at 2.9% in the month gone by. Inflation, however, remember, continues to remain above the Fed's 2% target. Now, all the major U.S. indices on Wall Street are trading with a positive bias after the inline inflation print. In fact, we caught up with Arnab Das, who's a global macro strategist, that is EMEA Invesco, to understand, of course, the impact of the recent inflation print, all those numbers also that has trickled in, and more importantly, his perspective. Listen.
Given all of the challenges to the Fed from the administration generally and the president in particular, but I think the dynamics have changed a bit so that the softening in the labor market and the argument by Stephen Myran and others that the potential growth rate or that the neutral rate of interest is somewhat lower, given a lot of the changes that are taking place. I think there's some truth to that argument. Maybe not as much as some people would like to believe.
All right, let's shift our focus to an exclusive conversation with ET now. Atul Lal, MD and VC Dixon Technologies, discusses the scope of growth for electronics components manufacturing, that is in India, and also touches upon the impact of global uncertainties that we're looking at. Listen in to an excerpt of that conversation with my colleague Sumita Kuri.
There would be, and there is already a significant response to the ECMS scheme. And that's going to be a very important stepping stone for the industry to deepen the manufacturing. I think it's a very well-structured scheme. What I understand that the participation is extremely buoyant. We in Dixon are participating in 5-6 schemes.
Okay.
So, yeah, we are excited about it.
Would you be able to give us a number in terms of how much are those investments worth?
From Dixon's side, I think we are committing an investment of almost 2,800 crores.
Okay. 2,800 crores is essentially what you're looking at. But sir, let me ask you one final question. This is around geopolitical disruptions, and of course, all businesses are impacted. Some are impacted more, others not so much. What's been the case with the electronics ecosystem? Donald Trump was stating that he will sort of introduce separate sector-specific tariffs later on. He's released the pharma tariffs now. He's also expected to release semiconductor tariffs as well. But in terms of an impact that you're looking at the moment and going forward in the future, how do you look at that?
You see, fortunately in our case, our largest play is in mobiles. For mobile, there's a carve-out, so we are not impacted. But please appreciate that any element of uncertainty for business.
All right, from one exclusive, let's move on to the other, because Sanjay Agarwal, MD Global Capacitors, discusses the company's strategies amid persisting tariff concerns and also talks about exploring alternate export destinations. Listen in to a slice of that as well.
We are exporting about 20% of our top line to US. This market we have developed over the last 20 years, and our product falls under 50% tariff, and we are badly hit by that because the customers are now threatening us to either bear major part of the tariffs or be ready to share our business with our Chinese competitors from whom we snatched the business many years ago. So it's a difficult situation for us, and we all are waiting for some steps from the government at the political level to diffuse this crisis. It is because otherwise we are getting forced to lay off our workers, because in that absence we really don't know what is to be done.
So in terms of looking at diversification, the government is looking at diversifying its exports to other geographies. Are you undertaking that, and are you getting any help from the government?
And we are already exporting to wide markets like Middle East, Europe, South America and Far East. So the developing alternate market is always on the agenda. It is not that we are hit by Mr. Trump that we will go for new markets. We are already working on that, but America is the most evolved market in the world and the biggest market in the world. So getting a hit from that market affects us in particular very badly.
Okay. And in fact, you've also applied for the ECMS scheme as well, right? In terms of production capacity, the capacities that you're looking at, how much would that be worth? The kind of investments that you have made, how much is your proposal worth?
We have given a proposal worth of 90 crores of investments, and we expect to double our turnover in next 5 years.
Let's shift our focus to the fact that the MEA reacted to the EU comments on Russian oil and comments made by several leaders, including US President Donald Trump, on halting Russian energy imports. Now, the MEA reacted saying there cannot be any double standard in the matter. Let's listen in exactly to what MEA spokesperson Randeep Jaiswal had to say.
On Russian oil and energy sourcing, we have articulated our position very well. What is our broad approach to it? On the EU comments on Russian oil, let me also tell you, and would like to attract your attention to some of the comments that have been made by several leaders, including President Trump, on that EU and NATO and G7 countries should also look at halting energy imports from Russia. I mean, there cannot be any double standard in the matter.
All right, let's move on. The centre has announced that it will borrow 6.77 lakh crore in the second half of the 25-26 financial year. In fact, this borrowing will be done through dated securities and will also include 10,000 crore worth of sovereign green bonds. Now, the move is part of the government's overall strategy to manage its finances and meet the fiscal deficit target of 4.4% for the year. My colleague Prakash Priyadarshi had put this into perspective. Let's listen in.
The government releases borrowing plan for the second half of the financial year 2026. It plans to raise 6.77 lakh crore in the second half of the current financial year. Rupees 10,000 crore will be borrowed through issuance of sovereign green bonds. Gross market borrowing of rupees 6.77 lakh crore shall be completed through 22 weekly auctions. Along with that, the government will continue to carry out switching of securities. In fact, DA Secretary has mentioned that the government's gross market borrowing for 2026 will be slightly lower than announced amount of rupees 14.82 lakh crore for the current financial year. That will be standard rupees 14.72 lakh crore for FY26. Along with that, the government will also cut down issuance of long duration bonds based on consultation with RBI. In fact, there is a possibility of a slight dip in Q2 growth numbers due to various factors, but the DA Secretary has clearly mentioned that the government is confident of achieving fiscal deficit target of 4.4% for FY26, along with the overall growth number estimated for current financial year.
All right. The Finance Ministry has said that India's economic outlook looks optimistic and that inflation is expected to remain well under control. In fact, the ministry also said that a revision in GST rates may lead to a one-time reduction in inflation over the next year. Going back to Prakash, who'll get us details on that as well. Prakash, over to you.
The Finance Ministry has come out with the monthly economic review report for month of August, where it clearly mentioned that India's economic outlook remains broadly optimistic despite multiple challenges coming from the external sectors. Q1 GDP growth has surprised the state. In fact, domestic components of demand played a very key role in domestic growth. Along with that, when it comes to GST rate rationalization, the report has categorically mentioned that the GST rate rationalization will give push to the domestic demand, domestic growth. In fact, this move is expected to lower the tax burden on consumers. Along with that, the GST rate rationalization will provide cushion against tariff impacts. A very significant observation in the report. Inflation is expected to remain well under control. Despite tariff-related headwinds, India's external sector has remained resilient. FDI inflows continue to rise. When it comes to U.S. government's recent decision to impose $1 lakh US dollar for all future H-1B visa, the report has clearly mentioned that it causes disruptions, but its overall impact, entire impact, will have to be evaluated in the future. And the government's reform agenda is expected to cushion the economy against adverse effects of trade disruptions.
Time for a quick break here on Business at 9. Stay with us this Friday evening. We're going to be right back.
Your GPS knows the roads, but not the off-roads. That's why you need grip that never quits. Cr Cross Drive Grip,
which was at a grand ceremony in Chandigarh. Remember, after serving the nation for 62 years, the jet that once ruled the Indian skies is finally took its last flight in Chandigarh, the very place its journey began. And there's a special report that we have in store for you. I'll leave you with that. Thanks for joining.
through the skies in 1965 and 1971, India and Pakistan went to war. It dominated the enemy in 1999 during Kargil. And in 2019, as Balakot was being bombed, it made history shooting down an American F-16. After 62 years of distinguished service, the icon flies into aviation history from the very airbase in Chandigarh where it was inducted. It's about time. Inducted in 1963, the MiG-21 was India's first supersonic jet fighter. Designed by the Soviet Union, it became the workhorse of the IAF for decades. Over 870 MiG-21s were inducted over 6 decades, making India the largest operator of this aircraft outside Russia. Over 600 were made in India over the years, and the MiG became a symbol of India and Russia's enduring partnership. MiG-21's agility and speed were unmatched in its time. It played a decisive role in the 1971 war, downing several enemy aircraft. In 1999, during the Kargil conflict, the MiG-21 was again called into action. Even as late as 2019, a MiG-21 Bison shot down a Pakistani F-16, a rare feat in modern aerial combat. The Bison was old, but Abhinandan Vartaman showed us that in the right hands, it could still outperform many newer aircraft.
The MiG-21 taught us how to be innovative, to make do with what we have and produce results. The MiG-21 flew in conditions in which it was not meant for.
But this remarkable journey has also been marred by tragedies. Over 400 MiG-21s have crashed since their induction, claiming the lives of more than 200 pilots. The aircraft earned the grim nickname Flying Coffin due to its outdated systems and maintenance challenges. There were upgrades over the years, but MiG-21 had become a necessity rather than a choice for Indian Air Force. To be fair, it was never meant to fly for 60 years. It was forced to. As the IAF officially retires the last MiG-21 squadron, Panthers, the farewell is bound to be emotional. After all, this was a jet that trained and defined a generation of pilots.
So it's really a proud moment, especially for Panthers, for being the swan song for MiG-21s. Panthers were the first squadron in the world to be equipped with the Sabre Slayers, that is the Nats, in 1960. Thereafter, we also had the honor of having achieved the first air-to-air kill in the Indian subcontinent in the jet age during the 1965 war. And now it's another distinction for the Panthers that we are the last MiG-21 operating squadron in its operation capacity.
Leading the tribute to the MiG-21 will be the Air Force Chief, who will fly the Bison along with 6 other fighter pilots. One of those part of this historic flypast will be Squadron Leader Priya Sharma, only the 7th woman fighter pilot in India. The MiG-21s will now be replaced by indigenous LCA Tejas and advanced fighters like Rafale and the Su-30 MKIs. From dominating dogfights to defending our borders, the MiG-21 served with unmatched courage and commitment. As we bid farewell to this legend, India remembers not just an aircraft, but an era. The MiG-21 gave the IAF wings that it never had before. Bureau Report.
We are mandated to have 70% indigenous content in this aircraft. So obviously most of the stuff has to come from India. So I think GE itself has now overcome the initial technical problems, and they are in a position to ramp up. So